Good morning. Sorry about that. It seems the gremlins are back. If you can hear me, welcome to the market forecast. It is Tuesday, May the 24th. I'm John Hoagland. Thanks for trusting me with your time. As usual, we're going to be looking for accurate context, good risk management, and patience. Hoping you're all feeling good, feeling healthy, and ready for the trading day. And as always, make sure that you are well prepared. You've done your homework, you've got your hypotheses, and you know what you're looking for in these markets. As usual, looking at the economic numbers first this morning, 8:45, the PMI composite flash, a preliminary of the PMI, 9 o'clock new home sales, and at 11:20 Central Time, Jay Powell speaks. So he's going to be, I think, discussing, of course, economic policy, and he's going to be speaking after a couple of other colleagues of his have suggested that perhaps a pause in rate hikes after two 50 basis point raises might be something that they would be considering. So we've got all that going on. As far as U.S. Stocks futures, set to open lower, snapping the relief rally after Snapchat says that continues have worsened further and faster than expected. The stock tanked 30% this morning. Zoom, however, a bright star in the sky this morning after good favorable earnings per share yesterday. As far as earnings due out today, NetEase, AutoZone, and Ralph Lauren all beating on earnings and revenues. We're waiting for Intuit and Nordstrom after the close today on what seems to be a never-ending earnings season. Crude prices remain kind of range-bound, awaiting API and EIA. Speculation that the price of gasoline may be getting too expensive and may start to quell demand. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast and Recap. Subscribe to our YouTube channel. You get notifications when we do go live. A brief look this morning at the VIX, the dollar index, and the 10-year yield. The VIX is up about 3%, still just below that 30 level at 29.36 last I looked. Dollar index still leaking to the downside, 102 even last I checked, and the yield on the 10-year approximately 2.8. We've got we have Make Hogue Money today, right after the market forecast, approximately 8:20. We're going to see if we can get through the forecast here, get done by about 8:15, get into the Zoom room for Make Hogue Money today. There's the link. If you are interested, go ahead and join up, register, and we'll see you at 8:20 in Make Hogue Money. What is Make Hogue Money? Well, it's an opportunity for all of us to sit, look at the S&Ps, watch the S&Ps on the open, discuss opportunities that you bring. So make sure you bring your trade ideas. We vote on them, we discuss them, we think about them. We have other people that come in and are available to talk and to talk about their time frames, their tools, and bring their ideas. And it's I think a very good a good time and a good opportunity for us to considering to learn about futures and how other people look at markets. It's a good thing. Shaw, just get a Mac. Yeah, it's a brand new supercomputer and it just does not seem to be operating correctly. So my saga with the computers and technology is not over yet. I got to say good morning, Brian Shaw, Theo, chilling with Dylan, James Swan. Market wants to know which way I'm going to go so it can trade against me. It's amazing sometimes how the market makes a liar out of us, right? Will, good morning. Charles Tachyon, Zach Sykes, good morning. Johnny Baracco, Daniel Gutierrez, good morning. Yeah, it does seem like the market is waiting for some kind of a spark. We're going to see that in the charts very shortly here. I print money. I love that name, Frederico. David, Rusty Golfer. I think you're my spirit animal. My spirit animal is a Rusty Golfer. Glitter Sandwich. Good morning, Bill Phillips, Manuel Caesar, Marcelo. Good morning, Day. Ron, Dan Trader, JD. Good to see you, sir. Terry King, Vince. Good morning, Kevin Laffey. Good morning to you. Haswan. Good morning. I'm sorry if I messed up the pronunciation of your name. Devant, Sarah Hall, good morning, and prayers and love to you as well. Is it me or anyone else getting a spinning circle of doom? Yeah, the video is not loading this morning, just for some strange reason. Good morning, Jerry is awake. Marcelo, Jerry is awake. Hopefully, I am too. Three Lions, Force Driven. Rob T, good morning. The Gremlins, yeah, the Gremlins are back. You're on. Thanks, Kevin. Loud and cute. Okay, good. Thank you, Vince. Dr. VJ. Tech advice, just get a Mac. Okay, Dan. Thank you, Scott Saw. And you conquered. Bottom called by Tom DeMark. Thoughts? I don't know Tom DeMark, and I'm hoping he's right because I haven't looked at my 401k in a month, and I'm afraid to. Brody, good morning to you. Rational Investor, good morning. Brian, good to see you. James Swan, might take a long lunch today. Try watching people making Hogue money. Hey, that would be good. I know you're across the pond, James. It's good afternoon to you. Isaac, Stephen C. Oh, looking all cleaned up and ready to rock it. Yeah, well, I'm as cleaned up as I get, kind of. Good morning, Dan. Good to see you. Back to yesterday's open. That's the recent theme. Chris Johnson, good morning. Drum Lab. Isaac, good evening here in Kenya, East Africa. Isaac, it's good to see you. Hopefully you're doing well. Lamus, Rob Crust, good morning. Keith, good morning. Joe Jacklow, good morning. Joe, Devant, and Denny. Good morning to everybody. And again, welcome to the Market Forecast. If this is your first time through, hopefully you're going to find this information helpful. Again, we focus on really looking at the context of the market, always thinking about risk management first and trying to remain patient, which is, I think, going to be important in some of these markets this morning. Natural gas, maybe not so much. Let's go ahead and jump into the charts here so we can be ready for Make Hogue Money again at 8:20. The link is right here. Let me put that in again for you. And we look forward to seeing you there. Isaac, welcome. Glad that you're here. All right, let's jump into the charts and see what we see. So this is the E-mini S&Ps. This is the daily chart, of course. We like to start a little further out in time to see what the context looks like. Obviously, the structure to the downside is intact. Open interest loss on Friday. Yesterday, the preliminary open interest bulletin said we had added 3,000. Actually, we lost 4,500 in open interest on the pull-off off the chasm on Friday. That's not all that encouraging, and it's not all that encouraging after yesterday, too, with low volume in New York and in futures, and losing 2,600 in open interest. So again, we see that the rallies are hollow. We're not bringing in business. We're evaporating business, and that's not good for a healthy upside auction. This market is, I think, like was mentioned, it looks like the market is just looking for new information, and I'm afraid it's going to kind of be like a big sore toe. If any bad news comes out, I think it's going to react very quickly and badly, if you will. It seems to be looking for some sort of reason to go back and retest the low on Friday, which we kind of established on the daily chart looks like rejection. On the daytime frame profile looks like an unfinished downside auction. There's a little bit of excess at the low on Friday, but not much. It doesn't seem as though that the downside auction may be over, and that is now also kind of foretold by the lack of open interest on Friday, the loss of open interest, I should say, and the loss in open interest on the up day that we had yesterday. We're basically inside extended trading hour range today. Take a look at the 30-minute chart. Okay, so here is our chart. We lost open interest here. We lost open interest here. We have some overnight shorts in this market. I wouldn't say that there's a tremendous amount of them. We do have a 1 hour long gap. Okay, that's somewhat interesting, right? So we've got a daytime frame close to open gap, but it's not really a true gap in the fact that we're still in range from yesterday. In range, I'm thinking patience. We've got an inside day in extended trading hours. Our overnight is close to the low from yesterday. Short time frame control, it seems, as this market awaits new data. Short time frame control. What does that mean? Well, when we look at this at the range from yesterday, if we look at the high, we find that it's even with the high from Wednesday's downside route, the high from the value area from yesterday's downside route. When we look at the low from yesterday, we see that the market tried to come back and test settlement, but yet was unable to do so. So the market seems to be, at least for now, respecting short time frame levels. And we're going to be opening in range outside of value. So my first question is going to be, are we going to reaccept inside value? That's going to keep me probably waiting a little bit longer to look for opportunities. We're going to be watching this open in Make Hogue Money, and I think it's going to be an interesting opportunity for us to exercise a little bit of patience, perhaps, unless something changes. Good morning, my brother Rick. I love you. So let's take a look back into the crude oil, which is just about to open. Here's the daily chart. All right, well, we've broken out of our channel here, but we're not really there's no momentum. We added 5,800 in open interest. That's the preliminary again. And we see volume slowing as we get into balance. This market just rolled over. Really low volume yesterday. We did add some open interest, but just a very confused, non-directional day yesterday. It ended up being pretty much a doji, which is an indication of indecision. Open interest increases energy. Volume really kind of sucked it out of this market yesterday. We're waiting for the API. The API and the EIA are really in question this week as traders and economists start to ponder how much is too much for gasoline and what level is going to curb people from buying it. If it gets too expensive, people are going to make different choices, and that may make a difference in overall inventories of crude oil and gasoline here in the U.S. So I'm looking at kind of short time frame control here as we wait out this new information. We're largely in range. Okay, here's our overnight. Here's our 30-minute chart. Settlement is 110.29, one tick above Friday's settlement. Where are we? Well, we're in range. We're in value. Do we have any overnight inventory? Here's where we opened last night, right here, and here we are. No overnight inventory, in range, in value. I'm going to suggest trying to stay patient and waiting for new information, which may not come until after the close today or tomorrow with the EIA. Here's another market that I'm looking at as largely short time frame controlled. Look at our low yesterday. Low of value yesterday, low of value the previous day, high of value inside the previous day. Overnight high up here near this little swing high, our overnight low near the low from Friday's session, and right at the value area high from the day previous to that. So the market seems to be respecting short time frame levels. We are miles away from weekly kickoff high and low. Here's the weekly kickoff high. Here's the weekly kickoff low. So it kind of suffices to say that we're largely going to be short time frame controlled until there's some sort of change. Let's take a look here at the first minute. Okay, we've got a 27 tick opening range. We've opened to the downside. Is this a big opportunity for us to take advantage of the opening range? We got a 27 tick opening range. What are we looking at here? 27 tick opening range. We could probably bring price back down to value low from yesterday. At this point, I don't see that it's necessarily worth trying to jump into this move to the downside, as again, we're in short time frame control and a lot of random activity is likely to go on. So try and stay patient here. Market has not changed value. Our opportunities are probably going to come as the day goes on. Nasdaq, very similar to the E-mini S&Ps, as of course they are very similar yet very different markets. Another hollow rally yesterday, losing 3,500 in open interest on very low volume. So volume and open interest were weak on this move up, indicating potentially another hollow rally yesterday. We had 4 days here that were largely in consolidation. We've got this 30% pullback off the all-time low of 11,727 was weekly kickoff last week. Still seems to be somehow supportive. This market is, again, like a sore toe, seeking the impetus to do anything. If there's any bad news, then we may see the jerk to the downside. Other than that, I'm kind of looking for a range-bound type of day, especially before Powell speaks. When he speaks at 11:20 Central today, of course, as we always say here on the Market Forecast, ACH, anything can happen. So here we go. We got the big 1 hour gap here. I'm not really viewing that as a really important thing because it keeps us in range from the previous session. Are we holding some overnight shorts here? Perhaps. Here's that weekly kickoff from last week in gray here. It looks like an interesting spot. Relatively close to the overnight low. But again, I'm going to try and stay patient because the market hasn't really changed all that much in the last 3 sessions, and now we're into the 4th session in range, and we're centrally located. Our little tennis player is sitting mid-court looking for the next volley. Gold. All right. Gold rolls on Thursday. Don't forget, we're going to be going to the August contract. We're going right past the July contract into the August contract. Yesterday, we didn't really have great volume. And again, it's difficult to read because we're in rollover. We lost 2,000 in open interest, yet, yes, another challenge to read because of open interest. So we seem to be one-time framing a little bit higher here. Right now, we're on an inside day. It means yesterday's extended trading hour range is outside of our range so far yet today. So as we failed to close above weekly kickoff high, settlement was 1847. The attempt at accepting above here could be kind of vital for us. But again, in rollover, it's kind of tough to see with volume and open interest split between different contracts, different contract months, I should say. So far, we've got an inside extended trading hour range. Here's our settlement from yesterday. We had a lot of overnight longs that just really unraveled through the entire session. I think we maybe closed this gap just about to the tick. Settlement was below that level. We've got overnight inventory a little bit to the long side. We're holding above an important inflection level. But again, inside extended trading hour range. So has there been that much of a change? You're getting this market continuing to try and push to the upside. We've taken out the overnight high. Our next target would be the overnight high from night before last. A lot of these markets are kind of in a situation where I'm really inclined to try and stay very patient. We opened in range and in value. We're attempting to leave value. If we do see momentum increasing to the upside, volume increasing to the upside, there may be some continuation in this, as this is an important inflection level. Thinking longer time frame traders will need to adjust inventory, keeping in mind that we're in rollover and that may be more difficult to poke them into action than if we were not in rollover. Euro. So we've had some dollar weakness over the last 5 sessions. We've got an uptick in, let's take a look at the daily first here. So we got an uptick in volume, not tremendous, but we did add 9,400 preliminary estimated open interest on this push above weekly kickoff high. There is plenty of space above this weekly kickoff high. So far, that level has been supportive overnight. And again, just kind of pointing out the space above, we've got this swing high up here, which is 109.58.5 ticks all the way up there. So just kind of looking at the possibility that with all that space, we could continue this move. Of course, a lot of it depends on the dollar. Take a look at the 30-minute chart. Lots of visuals, lots of repair in weak downside structure above price. So yesterday we ground higher against Delta. This is an indication that longer, stronger money may be possible in an accumulation of new longs or in a liquidation of shorts. Whatever happened, we added 9,400 in open interest. It looks more like we had longer time frame buyers just accumulating longs, and accumulating longs. It makes sense to me that we're opening and have opened with some overnight longs. Those overnight longs basically kind of closing the gap and not finding acceptance. So I'm looking for opportunities to buy weakness in this market. And this gap close here might be just the ticket which we may have missed. And on to the 10-year. So rates have been hovering between 3% and about 2.8% for the last 5 to 6 sessions. And it shows in the price here. We've got an inside day after an inside day. We lost 5,300 in open interest yesterday on a pullback off the high. Here's our inside day after an inside day. This market is coiling. It doesn't seem to be bringing in opportunity. It doesn't seem to be bringing in energy. As a matter of fact, it seems to be cutting off energy. Very low volume, losing open interest. I believe the rollover for Treasuries is Thursday as well. So it kind of makes sense that we're kind of floundering here. So yes, interest rates roll on Thursday, so it makes sense that the volume has started to fall off, and open interest is going to be a little bit wonky, if you will. Take a look at the 30-minute chart. Here's our inside day, and after an inside day, the market kind of opening in range above value. Nothing really all that important to look at here, where you got 3 days in range, smaller ranges, and I think that the opportunity certainly offers itself at the extremes. We have very defined extremes for the last 3 sessions. The high here and the low here. In the middle, our little tennis player is center court looking for the next volley. If the volley's up here, there's our opportunity. If the volley's down here, that also offers an opportunity. We're range bound. Range bound rules, we fade the extremes until proven wrong. On a sustained breakout outside of value of balance, we go with. always makes it challenging. Markets are never really easy. And for the market of the day again today, I believe, we have the natural gas. We had a nice pop in volume yesterday. Remember, this is a market that recently rolled over as recently as yesterday, and we get a nice pop. We lost 700 on that move to the upside. It seems reasonable that we stopped short this morning of this swing high over here from 5.6. What is that high? 905. So we're kind of coming off this high from yesterday. We've really just kind of opened. But that open interest is, again, disappointing for an upside auction. Not saying that I want more expensive natural gas. Big move. Didn't really bring in a whole lot of open interest. We did close above the weekly kickoff high. Settlement is 827. We did have a late spike, and we've opened in the late spike. It seems as though we're having a little support here, almost past the base of the late spike. I'm looking at the bases, 874 to 870, where this high is here and where this low is here. It's a high target area for us. So opening in the late spike offers the perception that this market is accepting prices at higher levels. We did not see a big increase in open interest on this push to the upside, however, yesterday. So that makes this late spike a little bit suspect for me. Very little overnight inventory. Starting to try and press through the base of that late spike. The late spike rules are if you open inside or above a late spike to the upside, you look for opportunities to go long. We've opened in the late spike, but we are having a little bit of trouble holding above the base of the late spike. If we continue to push against our overnight low here, things could go a little bit wrong if we're going to be following late spike rules. It's going to be a challenging trading day all around, if you ask me. The markets are trying to tell us the direction that they are attempting to go, but I don't think that they're doing a very good job in saying in plain language what the direction of the market is going to be. So we've got about 5 minutes to get to Make Hogue Money. I like to get things started at about 8:20. If you had questions today, I apologize. and we'll try and touch base on those maybe tomorrow on the forecast or in group coaching tomorrow afternoon at 1 p.m. Central. Keep it in mind, and I'll look forward to maybe having the opportunity to ask them if they're not too time based. So let's take our deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to seeing any and all of you at Make Hogue Money today. The link to register is in the chat, and I'm looking forward to seeing you there. If I don't see you there, have a great trading day. We've got the Coach's Playbook today, which is basically what we wish we didn't know coming into futures trading. This should be a good one. I'm looking forward to it. And then, of course, we've got the market recap today at 3 o'clock. I look forward to seeing all of you anywhere and anytime. Trade well today. We'll see you in a couple of minutes. Trade well.